What is going on, everybody? Welcome in to another edition of the Daily Energy News Beat Stand-Up here on this gorgeous April 25th, 2023. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas. Stu is out on assignment today, so I am rocking a solo show. I appreciate you guys tuning in. I will have to say the last two solo shows that Stu and I have both done, so 4 total, he's beaten me in downloads. So I need your guys' help here. If I was a 15-year-old YouTuber, I would tell you to smash that like button, but you're probably listening to this on your podcast. If you're driving to work, send this to one of your friends. Bring it up unannounced at the office. Make your coworkers feel uncomfortable with the amount of times you're telling them to listen to this podcast. It'd be very much appreciated. We need to beat Stu. We nonetheless have a great menu tonight for today's stories provided by Stu. We'll keep it fairly short. I've got 2 stories and then finance first. Big story out of the U.S. Supreme Court. I don't know why I have to be the one that covers the political stuff, but the Supreme Court rejects climate bids from oil and gas company. This has long-ranging effects. I will dive into what that decision was today and what that means for but all stakeholders involved. And then we're going to go ahead and look at U.S. oil refiners to post strong Q1 earnings, but demand outlooks dims. You know, this isn't a crazy week for earnings, specifically in the U.S. Refining business. So I will cover what that outlook looks like. We'll quickly look at the overall markets, how the S&P and NASDAQ did yesterday. Oil up a little bit, 70-60. Natural gas holding strong at $2.25. I will cover all that and a bag of chips, guys. But first, check us out again online, world's greatest website, www.energynewsbeat.com. It's where all of the stories I'm about to cover are from. You can hit the description below. Our team does a great job of making sure that description is updated with all the links. So as you're listening, boom, hit it. You can follow along with the story, all that. Dashboard.energynewsbeat.com, the best place for all of your data and energy news combo. Get it while you still can. You never know when it might go behind some subscription wall. I'm just throwing that out. There's a possibility. We appreciate everybody. If you want to interact with the show, questions at energynewsbeat.com. But enough of the pleasantries. Let's get into our first menu item. It's this Supreme Court story. So the title of the headline, Supreme Court rejects climate bids from oil and gas companies. The U.S. Supreme Court today decided against allowing climate lawsuits filed against some of the biggest oil companies in the world to be moved out of the state and local courts and into the federal level here. So it's very specific what happened. So large oil and mainly a conglomerate of big oil and gas companies, Exxon, Suncor, and Chevron. What they are attempting to do is move climate lawsuits away from the state and local level, which are jury style, jury style, where it's a jury, your own peers, all that jazz, to the federal level, which there's no jury. It's a panel of, ex-lawyers who are now judges, aka you've got the Supreme Court, the federal appeals court, all that stuff. That's what they were trying to do. They were trying to move all of that stuff out of the state and local level. Unfortunately, the Supreme Court said no. We got Richard Wiles here. He's the president of the Center for Climate Integrity. So, probably a lot we agree on. He said the high court's decision is a major victory for communities across the country that are fighting to hold big oil accountable and make them pay for the climate damages they knowingly caused. Now it's time for these polluters to face the evidence of their deception in court. I don't agree at all with that statement. Ipso facto to say that, these are the type of people who were opposing this. Now, we'll say this. This is where I'll zig when people zag. I don't agree with anything Richard Wiles said in that statement. Now, unfortunately, I kind of agree with the decision here with the Supreme Court. I am in favor of anything that hands over more power to the states and the local level than the federal government. And Stu, the reason why I'm saying this now is because Stu's not on the other side, because, his blood would be boiling right now. His blood would be boiling as I'm saying this. But this is an instance where, unfortunately, my belief of states and localities should control their destiny has to apply evenly everywhere, including oil and gas. I get that it would be great to have federal lawsuits for climate change, if only because the lawyers can do lawyer things and can work and meld arguments, and all you have to do is pitch them to other trained lawyers and judges versus getting someone like me on the jury, where I'm punching a clock, wondering when lunch is, and hopefully they didn't cut my TV access back at the hotel, or I have to play a crossword for the 80th night in a row, listening to climate scientists try to talk to me about greenhouse gas exposure. I mean, I'm only halfway kidding when I say that, like, there's a reason Exxon, Suncor, and Chevron wanted to go to the federal level. It's an instance where, unfortunately, my beliefs on who should control their own destiny must be applied evenly. I have to applaud the decision by the Supreme Court, if only. Unfortunately, this probably does mean we're going to see an uptick in climate lawsuits now that they know they have to be settled at the local level or the state level, which, again, you now get into jury trial. So, again, I'd be very interested in what Stu's take is on this. We will try to ask his thoughts tomorrow. I know his blood would be boiling with that take. So the nice part is we're going to get his thoughts tomorrow, let him cool off a little bit. But a big decision out of the Supreme Court, guys. Next up, we've got U.S. oil refiners post strong Q1 earnings, but demand outlook dims. As I mentioned in the open, I heard on Squawk Box this morning, 158 companies are announcing earnings this week, which is absolutely insane. I think it's one of the busiest weeks in the S&P 500 we've had in years. Specifically, we have refining markets. U.S. fuel makers are expected. This is the first headline of the Reuters article, but you can view it on energynewsbeat.com. U.S. fuel makers are expected to post higher first quarter earnings in coming days on strong fuel exports and margins, even as domestic diesel demand slumped during this period. Refiners have been riding a wave of favorable pricing and demand as pandemic-era closings boosted margins. Alternative periods of higher demand for products have also helped, with jet fuel recently sprinting higher as diesel falls off. To give you guys an idea, Valero Energy, the second largest U.S. refiner by capacity, will kick off its earnings on Wednesday. Their share per profit is expected to triple. I said that right, triple to $7.23. That's based off a mean estimate of 17 analysts. To give you an idea, a year ago, it was $2.31 per share. The top U.S. refiner by volume, Marathon Petroleum, their forecasted share per profit is $5.71 compared to $1.49. Phillips 66 could be up to about $3.60 a share compared to about $1.32. All of that is according to Reftiv, a very reputable refining company. Those latter will report earnings in later May. And to final kind of round out of the numbers, ExxonMobil signaled that its refining profits could reach $3.55 billion for the period compared to $332 million a year ago, which, again, was sort of hurt by high maintenance costs, but absolutely insane to think about what's going to happen with these U.S. refiners. If there was ever an opportunity to maybe go out and play the markets a little bit, again, we don't give investment advice. We are not investors. We do not suggest you take our advice seriously. This is for entertainment purposes only, but maybe Valero's a number to look at. I wouldn't be so sure if I wouldn't go buy some Valero stock right now. And again, I think I know the pushback I'm going to get. Well, diesel prices are slumping. Gas is at, $2, gas price. Well, again, the key is these crack spreads. And you have to look at, they mentioned this at the bottom of the article, the U.S. refining crack spread, which is a proxy for profit from processing a barrel of oil into fuels, is hovering around $30 a barrel, $10 lower than it was a year ago. So while crack spreads are still high, they're coming down a little bit. So, now may be the time to buy, see the pop, sell off in the next run or two. It'll be interesting to see where these companies go, but I expect, much like this article says, big earnings coming out of these U.S. oil refiners. On the finance side, guys, I mean, it's pretty flat. S&P was down, was only up about 1/10 of a percentage point. NASDAQ tumbles about 1/4 of a percentage point. Dollar index basically stays flat, 101.26. Crude oil drops 0.25 percentage point, 78.59. That's in this latter half of the trading session as I record this at 6:50. But overall, on the trading day Monday, it popped about 2.5%, or about 1.5%, excuse me, mainly off the back of some good Chinese data. To give you guys an idea, Brent did settle up about $1.07 or 1.3 percentage points, which is a little bit higher than what WTI said. Again, what we're seeing on, the story is Asian demand, and really what it sees is bookings for China's May Day. I don't even know what May Day is, but apparently it's an insane holiday for them. Bookings for China have absolutely skyrocketed. There's an implied shortage of jet fuel, and as they're trying to fill in planes to get people to this event. So, again, as China goes, as the dollar goes, that's how we will see crude oil go. I just spilled all of my pens because I'm a nut, but I think when we look at natural gas, I think the easiest thing to say is we're trading at $2.25. Thank goodness for the little bit of cooler weather that has swung in here, only because we could have seen ourselves continue to tumble below $1.90. I think the thing to watch for on natural gas is we have the upcoming storage report that drops, next week or on Thursday. And this is what I took note of when I saw this morning. Range of expectations, 29 to 82 BCF build. So we're into build. NGI has their weekly storage estimates at 77 BCF. So they're on that higher side of the range. But it's a big range. I mean, you're talking a spread of almost 65 BCF from an injection standpoint. I would like to say we'd be on the chiller side of the draw or of the build. But, I tend to take NGI as a pretty good barometer. So they say 77. They say, it's going to be on that upper end of the estimates. Not much really happening. We're going to see a lot of earnings come out. I know there's a lot of M&A deals going on right now. A lot of stuff under the weather sniffing around, but we will here's some news coming up very quickly. There's some rumors floating around. I heard a nice juicy rumor this morning about a pretty large Lee County, New Mexico company in talks, but we'll see what happens. But I'll check my sources on that. I'd ask Stu if there's anything else, but there's nothing because I'm in control tonight, guys. I appreciate you sticking with me. A little short episode. We'll get you out of here. Appreciate you guys checking me out and checking out Energy News Beat. Again, www.energynewsbeat.com, the best place for all your oil and gas news. For Stuart Turley, I'm Michael Tanner. Guys, we'll see you tomorrow. He'll be off leave.